disclaimer. As everybody knows, this information is very fluid, and as such, there could be things that need to be updated from time to time. An example of that is last night, there were a couple articles that came out, not on the rules themselves, but on potential relaxation of the time frame of the rules. So we recommend that everybody has updates to our website and make sure that their email address has gone through to the appropriate people, so you'll automatically get an update if something we post is new or if there's any changes to the toolkit. So just a quick agenda. Where are we now? I'm just going to go through a brief recap of what's happened the last 8 weeks. Then we're going to go through terminology of the application and things that have changed and things that we now know. And then Eric's going to take us through a toolkit demonstration, which is revamped. And then we're going to go through questions. And as Jared mentioned, there was over 200 questions that came into us. We've tried to build as many into the presentation as possible, and we've taken the most frequently asked questions, and depending on time limits, we're going to go through as many of those as we can after. Okay, so a quick background. The CARES Act was passed at the end of March, and things have really been very fluid since then. Applications began in early April, depending on your entity structure. And as we know, we've had a couple rounds of funding. The intention behind this was to cover 56 days or roughly 8 weeks of payroll, some mortgage interest, rental payments, and utilities. What we've really tried to do is help our clients or our future clients by thinking through ways that we can maximize forgiveness. Clearly, forgiveness is an attractive aspect of the PPP. Over the course of the 8 weeks, we've got interim final rules on various areas, frequently asked questions that have been updated almost daily. We're now up to, I believe, 48 of those. And we're still waiting on final interim regulations. These were due out for forgiveness at the end of April. And instead of saying they'll be out soon, I've resigned to the fact that they'll just be out when they come out. So this application for forgiveness has allowed us to clarify some of the questions, but has often been the case, it led to a few additional questions. The HEROES Act, this was a frequently asked question, so I'll go through that quickly. Where does that stand right now? This is an additional bill, and it's much bigger than just the PPP, but it does have PPP aspects in it, and it passed the House last Friday. A lot of the commentary says that it won't pass any other House, Senate under the current formation, but it does have some bipartisan aspects in it. And what I found interesting on that is, additionally, last night, there was an additional rescue program that was referenced that Speaker Pelosi plans to bring to a vote next week, which would soften those rules that were also going to be softened in the HEROES Act. So stay tuned for that. I think it's really good timing, somewhat being sarcastic on that, but it is good timing because a lot of our clients and others around the country are in week 7 or 8 of the program. So some of these relaxation rules would increase the 8-week loan period to 24 weeks or allow employers to rehire employees all the way till the end of 2020. They also would guarantee access to PPP loans for small businesses with fewer than 10 employees. And lastly, clarify that expenses paid with PPP loans that are forgiven are tax deductible. This is a really big one. Lastly, where can you find the application? You can find it on the SBA website, the Treasury website, the Bloom website. So what is the application? At first, you might think it's overwhelming because it's 11 pages. And if you remember on the loan application, it was only 4. Not so fast. A lot of this is really instructions that helps us, and it will help us help you, or it will help your provider help you. So there's really 4 or 5 key pages. Again, right now it's set to expire the end of October. You'll be able to do this electronically. There's a calculation form. There's a certification page. There's also a Schedule A and then a worksheet to the Schedule A. And that's where really a lot of the action is happening on this form. And then there's a demographic information. That is optional, so they just put that in there to get some data. So what is the Schedule A? The Schedule A is where you're going to calculate the eligible compensation amounts. There'll be two tables for that. One for employees that were not around in 2019 or that were under $100,000 in 2019. Then a second table for those over 100,000. This is where you're also going to cap employee compensation amounts at 100,000. Determine the number of full-time employees. This was clarified. There's a lot of people that thought it would be 30 hours, and it came out to be 40. I think we'll get a good result there. There's also a simplified calculation that Rick will run through. Determine if a reduction is necessary. Same thing there. There's a couple reductions you want to stay away from. One is if you reduce the wages by more than 25%. The other is on the FTEs. And there's more dates flying around than I've ever gone on in my life. So I'm sure Rick will simplify that for all of you, but I do think those rules have been loosened a bit. Last thing on the loan application, remember, maximize forgiveness. This is for payroll. So make sure that at least 75% is used for payroll. If you just literally take what was eligible payroll costs and divide it by 75%, that's going to give you your maximum forgiveness amount. And that's also found on page 3 of the application. Covered period. This is an important one. It commences on the date you receive the loan, not the date your loan agreement is dated. There's some flexibility in the instructions that say you can include payroll that is paid and incurred during the covered period. So if you get the loan on May 14th and your first payroll is for May 15th, most, if not all, of that payroll would relate to a period prior to the covered period, but will be paid and incurred in the covered period, so it would count. There's also added flexibility for your last payroll. As long as the payroll costs have been incurred, they are eligible even if they are not paid until after the covered period. They still need to be paid timely. There just won't be any issue if that date is outside of the covered period. These two changes are really helpful as it relaxes the angst of many or concern that due to timing, they wouldn't be able to get a full 8 weeks of payroll in. With this clarification, depending on when your loan proceeds were dropped into your bank account, you might be able to get closer to 10 weeks. This would be a really good result as a lot of the modeling we've done and a lot of the commentary has been, well, if we don't get to 75%, we might have this cliff effect on top of not being able to really maximize our forgiveness. So I think that's a very good change that was put in. So a quick summary on payroll costs. Payroll costs are paid on the day the paychecks are distributed or the borrower originates an ACH transaction. Payroll costs are incurred on the day they are earned. So the next slide, the alternative covered payroll period. This is a new one. This also alleviates some of the concern that it was going to be difficult to align pay periods with the 8-week covered period. Let's just say you get the money on May 10th and your next payroll begins on May 16th. Then you can elect the alternative covered period payroll to start on May 16th. It would then go 56 days from May 16th. So it's not any extra days, it's just really aligning those pay periods. They say it was for administrative convenience. And remember, you have to have at least a bi-weekly payroll to be eligible for this. An example there, we kind of went through the example. You have to elect it, it's on the application form itself. One of the things I found interesting on this is if you do this, it's going to be very hard for you to have any payroll that relates to the prior period that's now eligible to be included in the 8-week covered period. Because remember, you're literally starting one day after you make that payroll period. And this only is for payroll. So your other eligible costs that are not payroll related still start literally the day that money is dropped into the account. So it seems like you might be, in some instances, sacrificing convenience for additional payroll costs. So I think this is one that really needs to be looked at carefully. Non-payroll costs. They must be paid during the covered period or incurred during the current period and paid on or before the next regular billing date, even if the billing date ends up being after the covered period. This again seems taxpayer friendly. Remember, regardless if the alternative election is chosen for payroll costs, for non-payroll costs, the 56-day period begins the day you get the loan proceeds. I think we all probably know by now, and Rick will go into some more detail on some of the special intricacies of the rental payments or the mortgage interest. But again, a key takeaway there is they cannot exceed 25% of the total forgiveness amount. And while I'm there, one more frequently asked question for now: what's included in utilities? Well, that's a good one. The application instructions on page 2 say that covered utility payments are business payments for service for the distribution of electricity, gas, water, transportation, telephone or internet service in which the service began before February 15, 2020. I think we all really have had that date hammered into our heads. But lastly, transportation costs. This might have been the number 2 question we got in total of over 200. What is a transportation cost? So with all the reading between the tea leaves and intertwining the frequently asked questions with the interim rules, where we found this transportation cost was in the self-employed section. It didn't give us a lot of detail, but what it did say that it was including gas and auto costs, but we still need a bit more on that one. So that's one of the open issues. And with that, I'm going to kick it over to Rick for a bit more detail on some of the other new topics that have been defined.
Thanks, Bill. So thanks for joining us today, everybody. I'm going to spend a little bit of time talking about the reduction calculations related to the PPP program. So even if the borrower spends 100% of their PPP proceeds according to the program guidelines, they may still be unable to achieve 100% forgiveness as a result of the wage reduction and FTE reduction calculations. The PPP forgiveness application released on Friday night does provide some clarification on those calculations that we will talk about now. We'll start by discussing the wage reduction calculation. It is important to note that only employees whom were paid at an annualized rate of less than $100,000 in 2019 or whom were not employed by the borrower during 2019 are subject to this calculation. If an employee started working on July 1st, 2019 at an annual salary of $52,000, their wages for 2019 would have been $26,000 presumably. However, their annualized rate of pay would have been $52,000, and they would be subject to the wage reduction calculation in Table 1 of the PPP forgiveness application. Similarly, if the borrower hired an employee on July 1st of 2019 at a salary of $75,000 per year, they would have paid $75,000 in 2019 to this employee. However, because the employee's annualized rate of pay was $150,000 in 2019, this employee would not have been subject to the wage reduction calculation. So when you're doing your payroll work analysis, it's not as simple as just looking at what was Joe Smith's pay for 2019. You must in fact look at their annualized pay to determine whether or not the employee is subject to the wage reduction calculation. The application also clarifies how borrowers must treat employees hired in 2020. Assuming that an employee was hired between January 1st of 2020 and March 31st of 2020, and that their annualized wages are less than $100,000, those employees are subject to the wage reduction calculation. For employees subject to the wage reduction calculation, borrowers are simply comparing the employee's annualized wages between January 1st of 2020 and March 31st of 2020 to the wages paid during the forgiveness period. So essentially, you're comparing the employee's annualized rate of pay during the pre-crisis period to the employee's annual rate of pay during the forgiveness period. If upon comparison of the annualized wages in each of these periods, the employee's compensation during the forgiveness period is 75% or greater than their wages during the January 1st, 2020 to March 31st, 2020 time period, then no wage reduction has occurred and no further analysis is required. If, on the other hand, the employee's compensation during the forgiveness period is less than 75% of what it was during the January 1st, 2020 to March 31st, 2020 time period, the borrower is potentially subject to the wage reduction calculation. I emphasize potentially. In this scenario, the borrower should move to the wage reduction safe harbor calculation. The PPP program's ultimate intent is for borrowers to maintain employee wages and encourage employers to maintain pre-crisis employment levels. The wage reduction safe harbor offers borrowers an opportunity to sidestep any wage reduction calculation for employees subject to a wage reduction penalty if at June 30th of 2020, the employee's annualized rate of wages equals or exceeds their February 15th, 2020 rate of wages. At this point, I'm sure many of you are frustrated by the detailed calculations that you probably see coming for each of your employee. And webinar participants with hundreds of employees are probably particularly frustrated at the task that lies in front of them. However, I would like to emphasize the following planning opportunity. Employees whom received an annualized rate of pay in any 2019 pay period that exceeded $100,000 is not subject to the wage reduction calculation, i.e., do not complete Table 1 of the PPP forgiveness application, just complete Table 2. As an example, let's assume that the borrower has a weekly pay cycle. Betty Smith is paid an annual salary of $52,000 per year, or $1,000 for each pay period, each weekly pay period. In December of 2019, Betty received a $1,000 year-end bonus in her final 2019 paycheck. This results in $2,000 of gross pay in Betty's final 2019 payroll. Because $2,000 annualized over 52 weeks equals $104,000, Betty is not subject to the wage reduction calculation and should be included in Table 2. For my clients who are participating in this webinar, I would expect that you have many situations where in any one given pay period where an employee earned an annualized rate of pay in excess of $100,000 and should therefore be excluded from the wage reduction calculation. So webinar participants, I would ask that you pay close attention to this aspect of the rules because it could significantly reduce the amount of work that you need to spend completing the forgiveness application. The forgiveness calculation application, the forgiveness application finally clarified how to calculate full-time equivalents. While we believe that a full-time employee would be any employee working over 30 hours per week, the application clarified that a full-time employee is actually an employee working 40 or more hours. Employees working less than 40 hours per week can be converted to an FTE equivalent by dividing those employee hours by 40. The application also includes a new simplified method that allows borrowers to treat any employee working less than 40 hours as a 0.5 FTE, regardless of what their actual hours worked were. The following is an example that contrasts these two methods. So here, under the initial, what I would call the normal scenario, we have employee 1 who works 50 hours a week. Now, no employee can be counted as more than 1.0, so that employee is capped at 1. We have another employee who worked 40 hours, they're a 1. Please note that the employee who works 30 hours per week, you would divide 30 by 40, and that equals 0.75. But the application indicates that you must round to the nearest tenth. Therefore, that 0.75 employee is rounded to 0.8. Similar calculations are occurring for the next two employees that work 23 and 10 hours. And you can see in this first scenario, you have 3.7 FTEs. Following the simplified scenario, each of your employees that worked less than 40 hours per week would be counted as a 0.5. And in that scenario, you would have 3.5 FTEs. So the second reduction calculation is the FTE reduction. As previously discussed, the intent of the PPP program was to encourage employers to maintain wage and employment levels. With this calculation, borrowers must compare their average weekly FTEs during the forgiveness period to their FTEs during the reference period. The borrower may choose the reference period that is most beneficial to their situation. The reference periods are either February 15th, 2019 to June 30th of 19, or January 1st, 2020 to February 29th of 2020. Or seasonal employers may opt for a third option, which is any consecutive 12-week period between May 1st of 2019 and September 15th of 2019. If average FTEs during the forgiveness period are lower than the chosen reference period, the borrower is subject to an FTE reduction calculation, reducing forgiveness. Recent guidance has provided some additional clarification on this calculation. You will not be subject to a reduction if you made a good faith offer to rehire an employee, but the employee rejected the offer. You will not be subject to a reduction if you terminated an employee for cause, the employee voluntarily resigned, or voluntarily required and received a reduction in hours. I would emphasize that these exceptions may only be utilized if the position was not filled by a new employee. I think that these exceptions were of grave concern to a number of clients who feared that employees would quit, or they would need to terminate somebody and maybe not be able to terminate them if they were trying to maximize forgiveness. And this, I think, is a real win for borrowers. So similar to the wage reduction safe harbor, the government also offers a safe harbor for FTEs. If a borrower, one, reduced its FTE employee levels in the period from February 1st, 2020, ending on April 26th of 2020, and two, the borrower restored its employee levels to February 15th levels no later than June 30th of 2020, they are eligible for the safe harbor. The application adds yet another safe harbor, which for the purpose of this presentation, I am calling the number 2 safe harbor, that essentially says borrowers that meet the following conditions are also not subject to the FTE reduction. If the borrower did not reduce the number of employees between January 1st of 2020 and the end of the covered period, or the borrower has not reduced the average paid hours of its employees between January 1st of 2020 and the end of the cover period, then they will also be eligible for the second safe harbor. We wanted to call to everyone's attention, the following that is included in the application. I'm sure most of the people on this webinar are watching the news and paying close attention to PPP, and are well aware of sort of the change in the blowing of the political winds, where it appears that the government is going to scrutinize certain applications much more closely than we had initially expected. And last week guidance was released that said any loans in excess of $2 million are going to receive additional scrutiny. We would highlight to people participating in this webinar that you must consider your you must consider the affiliation rules when determining whether or not you need to check this $2 million box. And it would appear, based upon the guidance released last week, that if you received an exemption from the affiliation rules as a result of being on the SBA franchise list, as an example, you also appear to be exempt from checking this box. If because of the affiliation rules, your loans are over $2 million, if over $2 million. I too, before the presentation is over, wanted to review a couple of very common questions that we have received. One very popular question is, we have an annual profit sharing contribution for 2019 that has not yet been made. Can we make this contribution during the forgiveness period and be eligible for forgiveness? Frankly, in our opinion, this question has not yet been answered, so I've put down a maybe. Our firm has created what we've called the Economic Relief Task Force, which has brought together about 25 people across disciplines at the firm and we meet several times a week to discuss a whole variety of issues related to PPP and related programs. And this is something we discussed in detail yesterday, and the conclusion was we just don't know yet. However, I would like to call to everyone's attention that even if you are able to get forgiveness on such a contribution, you must remember that based upon rules released by Treasury in the last few weeks, that will limit the tax deductibility of that contribution. Next question, will interest paid on non-real estate obligations be eligible for forgiveness? Based upon the instructions to the application, interest paid on any business mortgage obligation on real or personal property incurred before February 15th of 2020 will be eligible for forgiveness. I personally did not think that this would be the case. However, the application is pretty clear that you will be able to deduct this interest. The application also makes clear that prepayments of interest and principal payments are not eligible for forgiveness. Will lease or rental payments of personal property be eligible for forgiveness? The instructions again clarify that payments for rent or lease obligations pursuant to lease agreements for real or personal property in force before February 15th, 2020 will be eligible for forgiveness. So the copier lease, as long as it was in place prior to February 15th, appears to be eligible for forgiveness. We also made a note here, I made a note here that eligible non-payroll costs must be paid during the covered period or incurred during the covered period and paid on or before the next regular billing date, even if the billing date is outside of the covered period. So I think that is good news for most of the people participating in the webinar. Another common question that we've received is with regards to employees who now are working at home regularly because of the social distancing and different government regulations. Those employees are, must have home internet to complete their job, are using electricity in their house. And the question is, can borrowers reimburse employees for those costs and those costs be counted as eligible forgivable utility costs? Unfortunately, we believe the answer to this question is no, because most of these arrangements would not have been in place prior to February 15th, given that the crisis really did not start until sometime in March. Another very frequent question has been, can the owner's compensation be increased to maximize forgiveness? The application clarified this question. On line 9 of Schedule A, the owner's compensation is limited to the lower of the 8-week equivalent of their 2019 compensation, or $15,385. $15,385 is simply 100,000 divided by 52 times 8. So essentially, if you have an owner who was on payroll for $50,000 in 2019, and because of forgiveness, you increase their wages during the forgiveness period to $100,000, you are not going to be able to get forgiveness on the 100,000. You are only going to be able to get forgiveness on the 8-week equivalent of $50,000. Another common question is, can we put our kids on payroll? And the application does not appear to limit, you know, the ability to put your kids or your spouse on payroll. Bill mentioned earlier on that we are waiting for the final guidance, which may strike that down. But I would just remind everybody on the call that, you know, the IRS has rules regarding reasonable compensation that also must be taken into consideration before doing something like that. And I think at this point, I'm going to turn the presentation over to Eric.
Great. Thanks, Rick. That was awesome. So for everybody on the webinar, our toolkit will be available to download on the web link that's shown on your screen. It's not published yet, but shortly after this webinar, we will have it available for everybody to download, and then they can play with all the information that's within it. So what we're going to do, we're going to walk you through the toolkit at a relatively high level. I don't want to get too bogged down in the weeds, but there's a lot of information that we're going to try to cover in the next 23 minutes. I'm going to start sharing my screen so everybody can see the toolkit.
Just for everyone on the line, as we make this move from PowerPoint to the toolkit, your screen might go blank just for a minute, but don't worry, you are still connected.
Okay, Jared, you see the Excel sheet?
Yes, your sheet is up.
Okay, great, thanks. Okay, so on your screen now is our toolkit. You know, at first glance, you might be looking at the bottom and you're seeing a bunch of tabs. So it might be a little daunting on opening, but a lot of these tabs are informational, similar to like Bill was saying, 11-page application. Half of those pages are noise or instructions. So similar here, we tried to recreate the application page by page on our toolkit. We really didn't want to take any shortcuts here, and we wanted to be all encompassing. So if I scroll on the bottom, you'll see kind of color coordinated. The instructions all the way to the right. These are exactly the same that you'd see in the application. And what we tried to do to make it easier for the user as well is on top of each tab, we've labeled where this within the application mirrors. So here, you know, this is application instructions, page 1 and 2. So if I pop up the instructions now, and if I go to page 1, you'll see loan forgiveness application instructions. If I go back here, it's the loan forgiveness application instructions, and it kind of goes through the whole thing. So, you know, the second tab here, Schedule A instructions, page 5. If I go to the actual application, I go to page 5, instructions for PPP Schedule A. You'll see instructions for PPP Schedule A. So this will, I think, help some of the users have everything centralized in one place. It also makes it easy. So if you want to have the application up on one screen, people will work on dual screens, or maybe you printed it out, you're able to follow along because this is quite the beast here to fill out. And you know, before you get into it, you know, I think it's important for everybody to read the instructions. just get an understanding. You don't necessarily need to understand it all perfectly when you go through it the first time, but I think reading it through probably should only take about 5-10 minutes to read the instructions. And then if you start working with the toolkit, it'll give you a baseline of how to complete everything. And really, even though there's 20 tabs, majority of your calculation is related to payroll, whether it's your FTE count or it's the actual compensation. And hopefully through the next few weeks, payroll providers will have some of this information. If you're using something like ADP or Paychecks or Paylocity, if they're not doing it now, it may be worth a phone call to your contact there and say, hey, what do you guys have to help us with this application? And I'm sure if enough people call, if they don't have anything going now, maybe they'll develop something, because I think their assistance is going to be critical to making your life easier, because this is going to take some time. So with the calculator, what we try to do to make it simpler, because you're going to have to spend some time with it, is we have this first tab here, what we call the how to use calculator. And this really here is just trying to guide you what to start first. What order would you fill this calculator out on? Step 1 through 9. Before we get into the steps, I just want to show real quick the two tabs here, the PPP forgiveness calculation and the PPP Schedule A. Those are the two of the required documents, which we do have listed here. Required documents is the last tab, actually. PPP loan forgiveness and PPP Schedule A. Those are two of your required documents that you need to fill, include with your application. A lot of the other tabs are just informational to help you with the calculation. I wanted to start with those two real quick, just to show you. For the most part, every tab is going to have a note section or some guide saying, hey, this is what you need to fill out, this is what you need to input. Generally, the rule is if it's blue, that means there's a manual input. If it's gray/black, that means it's linked or there's a calculation there. So avoid touching the black or gray. Input the blue. So here up top, it's just informational. It's, hey, your business name, who's filling this out, what was your loan amount, your loan number, if you receive any amount on the EDL, because that's a reduction later on, what type of frequency your pay is on, cover period, if you're going to do the alternative payroll cover period that was mentioned previously, and then also this is the if you receive loans in excess of $2 million. But then in the actual calculation, the forgiveness amount calculation, you'll see as I scroll down, all this here is black-gray. It's all linked. It's all calculations. Same with PPP Schedule A. Every single, what is it, 13 lines? 13 lines. All our calculations, all are linked. So you shouldn't need to touch these two pages. Obviously, if you choose to not work with our worksheets, you're more than welcome to fill out. So like, let's say you want to just do cash compensation on your own on a separate spreadsheet. You can always override it here. We didn't make these cells restricted so you couldn't override it. And it'd still do the calculation. We just want to call it out that if you're using our worksheets in here, this is where they're linked. So back to the steps. Step 1, you're really starting with payroll. That's the nuts and bolts here. So where you're going to start there is your Schedule A worksheet. So all you have to do is click here. It's going to bring you right to that PPP Schedule A worksheet. And again, same thing, blue, you update, black, gray, you leave alone. That's a calculation. So the first thing I think you're going to want to do, and unfortunately, this is a little bit more work. They create extra work with two things. One, the covered period, and then the alternative payroll covered period. And then the FTE method, whether it's formula or simple. You don't have to, but I think most of you on this call, if you're joining this call, you're probably you're probably a little bit more in tune with due diligence and making sure you're doing the best for your company. So you're probably going to want to run both methods, and I think this calculator helps you identify which one's best, at least for the formula and simplified. So up here, it's just a drop down. You're going to select formula or simple. So formula, as Rick went through before, it's just a calculation. It's dividing the hours worked, average hours worked divided by 40, it comes out to that 0.9. If I switch this to simple, you'll see it switches it to 0.5. Same thing that we covered previously. So we're just going to keep it the formula for now. On the left here, you'll see we again, this is, oh, this cut off. Let me extend this, while we're live. This is page 9. If I go to the application page 9, we really tried to make this look as close to the application as possible. So if I go to page 9, you'll see here, PPA schedule worksheet, table 1, employee name, identification, which is the last 4 digits, cash comp, average FTE, salary hour, wage reduction, and so forth and so on. So if you look here, and I go back to the Excel sheet, you'll see it's got the same wording, it's got the same box, it's box 1, box 2, box 3. It's got the similar shading down below. So we really made it so it's as user-friendly and comfortable for you, because if you're trying to move information from here to the application or vice versa, it should be really seamless. So on the blue, you would update the employee's name. We put an asterisk here because there's formulas in this workbook that like VLOOKUP formulas for those who are familiar with Excel that require you to have precise precision. It's got to be the exact same thing. So you want to make sure that wherever you're putting in a person's name, Michael Smith, you make sure it's spelled the same way all the way through. You don't want to have Michael Smith here, and then the next time it's Michael Smith, you missed the H or something, because then it's not going to pull all the way through the workbook. You would update their employee ID, which is the last 4 digits of their SSN. You can see here, cash comp is black, FTE is black, and salary hourly wage is black. That means they're calculated from everywhere else. We kept the formulas here. It's all visible, all transparent, so it's easy for you to follow. So that's calculating things to the right here, K7 through N7. We try to show a separation between the two, because on the left here is per the application, on the right is kind of Bloom-Shapiro calculation. So this is where you'd fill out their compensation and their hours. So for this instance, Michael Smith, this is the wages you got paid for salary. He got a bonus for $750. This is during the 8-week period, whether it's covered period or the alternative payroll cover period. Bonus, commission, tips, if not included in the wages, you do not duplicate here. Goes through your excess of $100,000 is grayed out, because as Rick mentioned before, there's table 1, table 2. Table 1 being employees who make less than $100,000. Table 2 who make greater than $100,000. So there should be no situation where they're in excess of $100,000 here. Employer portion only on these 3: the state and local payroll tax, the healthcare premiums, and the retirement benefits. That it's critical. I think most people at this point, that was a really highly FAQ when people were applying for this loan, with employee portions being included, but I think most people now know it's just employer portions. State and local payroll tax it's your unemployment. If you're in Massachusetts, it's your paid family leave act, that type of stuff there. And it goes the same whether you're 100,000 or not. You'll see if I scroll down a tad to the table 2, it's missing the salary hourly wage reduction. That's because, similar to what Rick was saying before, if they're making more than $100,000 at any pay period in 2019, they are not, the wage reduction is not applicable to them. So that's not even factored in. It doesn't even have a row. It's same here. Doesn't even have a row on the application. But you will see, my point here was, you will see that the excess of 100,000 is not grayed out here. It is a black text, so it's a calculation, as you can see here. So in these situations, both Deborah and Barbara, that 15,385, I think you're gonna get a little bit familiar with that. That's the annualized $100,000 over 8 weeks rate. So both these people, if you look to the right here, you can see Deborah, she made $27,769. So $12,384 is ineligible for forgiveness. So she's capped at $15,385. Hours worked, she worked 40 hours. Barbara worked 45, so they both count as one full-time equivalent. Same thing up here. And then if I scroll down, because they have the FTE safe harbor calculation on this as well. It's interesting that they put it on the same page. You'll notice this is all gray, all linked in, which will bring us to our average FTE calculation. But that's not our next step. Our next step will be to go to the wage reduction worksheet, because you got your wage reduction here, you fill in your payroll. So next step is to do the wage reduction if you have any wage reduction. If you know you have nobody that you reduce wages on, you can completely skip this step. There's no point of filling this out by employee. No reason to waste your time. So if you kept everybody above or same rate, or you didn't drop anybody below 25%, there's no need to do this, because this is only for people whose wages made less than 100,000 and also had wages reduced greater than 25%. I'm not going to go through every single step here. You will see there are some blues here. There's also a lot of gray/blacks that you got what 1, 2, 3, 4, 5-ish fields that you really need to fill out. I think the steps are pretty self-explanatory. Again, this follows the application. The wording's the same. Step 1A, step 1B. So it's easy to follow along. You will see if so. Like let's say Michael Smith, for instance, his pay during the cover period was $37,375. Let's say his pay here, because if this is over 75%, that's not applicable. So let's say his pay was 40,000. I'm just gonna overwrite this. You'll see now it's blacked out. So this is not even applicable. There's no calculations going on. It just makes it easier. So if you are going to fill out this information and you're not 100% sure who's above 75, who's below 75, this will call it out really nice and easy for you and identify. Again, I'm not going to go through every single step here, because I think it's relatively self-explanatory. There's options to, as Bill had mentioned, there are ways to plan for this. Whether it's bonuses or increasing people at 630 with the safe harbors. But at the end of the day, the way our calculation has it here, we had 3 people who were affected by this by the wage reduction. So that $1,300 eventually will move itself up to a forward schedule. So once you're done with your wage reduction, you would go through your owner's compensation if applicable. Again, it might not be applicable. Here, it's important to call out, and Rick mentioned this before, is they're capped at the lower of, I have it here, here's the plus sign and here's the note, capped at the lower of 15,385, which is $100,000 annualized, or their 8-week equivalent compensation in 2019. So if you look at this example, you'll see during the 8-week period, they paid themselves, I don't know if you can see, it might be small on your screen, they paid themselves $16,850. However, you'll see only $14,000 is applicable to the calculation. And why is that? It's because the calculation is the lower of 14,000 or the 15,385 annualized. So, what if I change this to be 19,000, for instance? This shows 15,385. Again, it's not the total of what they got paid, the 16,850, because it is capped at 15,385. Now, if I turn this down to, let's say, 13,000, now at the 14,350 should be the sum of all these, which it is. So something to play with there. And as an owner, you have a little bit more control over that as well. So once you're done with the owner's calc, you would go to the FTE calc. This one here. Unfortunately, we would have loved to be able to have the hours here and the FTE information work together, but they're 2 separate calculations, so just more work for everybody else, right? We have to calculate, and again, if you know that you didn't have a reduction in FTEs, this is steps you could skip. If you're saying, hey, I know I had 50 people at 215 and I have 53 people June 30th, then this is you don't have to provide this to the SBA or to the lender. It's really just to help you with the calculation. I'm not going to walk through every step here. Again, this here, the calculation will be affected by, let me go back here. Let me change this to simple, just so everybody can see, so everybody's aware. This will change based on the method you choose, which I'll just leave it there, it doesn't matter. But this will take some time to put together. This is probably where outside of collecting all your payroll compensation, this might be your next biggest challenge, because you're really calculating the hours people are working during a multitude of periods. You know, you have hours paid from February 15th to June 30th, 2019, hours paid January 1st to February 29th, hours paid 2/15 through 4/26. So you got a lot of periods where you have to calculate, and that's kind of why I was saying, hopefully you can work with your payroll provider, and then they could have these calculations, you know, ready to run for you. All you have to do is process, and it'll be available. But no guarantee that will be available. So after the FTEs, you know, fill out the required information on the calculator. So that's just the blue stuff here. You'd want to fill that out. You'd want to then, if you have any non-payroll costs, you'd go here. Again, these are worksheets, so you don't have to necessarily fill them out. If you want, you can just put the number here, or you can override it on the actual schedule. That's fine. These are just here to help you organize. So you have your mortgage interest here, you have your rent here, they all look the same, and utilities here, and we broke it down based on the categories that, you know, we're still trying to get some more information on, but really here for your convenience. And then once all that information is filled out, you will flow through. Schedule A is the first thing. So Schedule A is your payroll side of things. So you'll see this 32,780 was your total from the worksheet for table 1. FTEs 3, which ties out to your 3 from this worksheet again. 1302, that's the wage reduction that we had here, which also ties back to here. Now this is table 2, which should tie to table 2, which it does. You have 2 FTEs, 2 FTEs. This is your insurances and your retirement plans, which will tie to your worksheet over here. So the combination of these, so 2,500, 2,500, and 2,500, which that's there. We had owner's compensation, which we went through. So you have a total payroll cost of 85,400. And then this here is the calculations you did on the FTE calculator. I'm not going to go back there again, just high level. So this says here, you know, we had 5. Our FTE reduction quotient was 100, so we're good. We're not going to get a penalty for reducing our FTEs. So then this information will then carry forward to your front page, which is ultimately the final schedule. So your payroll cost of 85.4 should be familiar with that. That's that line 10 here. The mortgage, rent, and utility payments are there. The wage reduction, the 1,300, you add those all up. There's no penalty on this FTE reduction quotient. So now you have the 3 levels. This is, you know, so you have the total of the all of your costs that you put together, your PP loan total, and then that 75% requirement that Rick had mentioned previously. It's whatever the lesser of these ones here. So so let's say your mortgage interest was 50,000, for instance. I'm just going to override there. You'll see now, before I bring this back, your forgiveness amount was 97,000. It was taking the modified total. If I change that to 50,000, because you're capped at that 75% of payroll, which is 113, so your forgiveness is 113. It's not 142 anymore, or it's not this modified total. It's that. Let's say my payroll goes to 185, for instance. It's not going to be the 196. It's not going to be the 246 because your loan amount was 150, so it's capped. So whatever the lowest of these three, that will be your loan amount. So I know I kind of flew through everything here. There's a lot of information, but I think it's one of those things where you download the toolkit, you start playing around with it, you read the instructions, you fill out, you go by the steps here, really you plan ahead of time with payroll information, having all your employees, hours that they worked, I think will really help you through this process. So, with that said, I'm going to pass it back to Bill, who I think is going to go through some, some more questions.
Thanks, Eric. Yeah, so I know we probably said 10 o'clock, but if you have the time, we'll go a few minutes over. As we noted earlier, there's a lot of questions. We'd be glad to, if we don't answer it today, follow up with you. And as Eric said, we've been able to look at this the last couple of days and start playing around with it. And that's what we're going to recommend you all do as well. It's on our website. And as things become a bit more clear, we'll probably do this again. And maybe you can submit some questions as to what you have questions on the actual templates. And some of this might be clarified. But let's just jump right into some of the questions that we've received. And I tried to pick the ones that we receive the most of, and also be fair to the self-employed, as I know we've focused a lot on businesses here. So first one, what happens if you get the EIDL loan or the EIDL? Well, I think that meant the grant, and the grant would be capped at $10,000. I think it was $1,000 per employee, capped at $10,000. If you did get that grant, it's on the first page of the application as well. You do need to reduce your forgiveness, as mentioned earlier in the presentation, by that amount. That one's pretty clear. Another question, what's the process to obtain forgiveness? Well, after your covered period ends, sometime after June 30th, the borrower will submit its forgiveness application to the lender, and within 60 days from submission, they should receive notification as to whether or not the loan will be forgiven. Now, remember, there's more than likely a really good chance that a piece of it will become a loan. And your options on that are really, it's a 2-year loan, but it starts when you originally get the money dropped into your account, but you don't have to make a payment on it for 6 months. Another question, how does someone who is self-employed with no employees calculate forgiveness? Okay, so no employees, self-employed. So when you originally calculated your loan amount, you would have been capped at $100,000, which equates to 2.5 months times about $8,300 or so. So you probably got a loan of about $20,800, and you're allowed what is called the owner's compensation replacement, which is 8 weeks of your 2019 net profit. So if you do out that math, you're going to be capped at about $15,385, which is the same amount that you'd be capped at if you were an owner in one of the S corporation. Let's just say that to keep it simple. Then you'd have a remaining $5,000 or so that would need to be spent on other items, right? So that's where you get into your other non-payroll related costs. And if that amount isn't satisfied, the remainder there would be a loan, as we kind of went through on the question before. Are costs incurred to help with the PPP forgiveness eligible for forgiveness? No, they're not. That one's pretty straightforward. As of now, no, there is no eligible cost for that. Are employees who are over $100,000 in annualized wages excluded from the eligible payroll cost calculation? No, they're not excluded. They're just capped at the $15,385. One thing I would note, and I think it was highlighted, they did throw that 2019 comparison period in. That was not there before. Bill, why are you and your team so excited about these rules? Okay, so I made that one up. I think that what's come out just in a high-level summary is very helpful with extending that covered period payments, where you can maybe grab 10, 12 days beforehand, and you can also include a payroll that's paid after the covered period. But again, like everything, there's been a lot of times where we've seen some pretty good ideas come out, and then regulations clarify those unfavorably. So don't tell anyone about the great planning ideas we have until we have them through regulations. I do mean that. And then other times we might be incorrect. So We think that most of what's come out is favorable on the non-payroll costs and the payroll periods, and it should really make it a bit more manageable to hit that 75% payroll level. What needs to happen for 100% of a PPP loan to be forgiven? Well, that's like throwing the game-winning touchdown pass in the Super Bowl. You'll see that we talk about maximization of the forgiveness, and that's really what we all are trying to do. You would need all loan proceeds to be used for forgivable expenses. So at least 75% would have to go to payroll. You'd have to have no reductions of your full-time equivalents. Again, there's a few testing periods there that we're excited about. It makes it a bit easier to hit that threshold. And the third thing you'd have to do for sure is have no reduction in wages of 25% or greater. And I still think that might mean that you'd have to have an increase in headcount, because remember, you're capped at $100,000. So if you have employees that are making over that in the annualized 8-week period, that would become an issue. Rick or Eric, anything that you're seeing come in that you think is worthwhile to share?
I'll go through a couple, Bill, and we'll be respectful of people's time and probably wrap this up at 10:05. One question: what documents are required by the bank for forgiveness? If you look at page 10 of the application, they do provide you with a listing of what documentation will be needed. They also on page 10 highlight the fact that there are certain documents that you will need to retain in your records that will not be submitted with the forgiveness application, and you will need to retain those records for 6 years. So please read that section of the application and make sure that you keep the supporting documentation for the forgiveness application together for the next, unfortunately, 6 years, so that if you have some sort of exam, you're able to support that. What happens to the portion of the PPP loan that is not forgiven? The unforgiven portion of the PPP loan will continue to accrue interest at 1%, and will have a maturity date that is 2 years from the date that the note was entered into between the borrower and the lender. In addition, interest is not due for the first 6 months after the date the note is entered into between the borrower and their lender. It is accruing, but you don't need to pay it. And the borrower must spend any remaining loan proceeds on expenses that are allowed under the PPP program, which may differ a little bit from actual forgivable expenses. Can a borrower accelerate payment for a forgivable expense so that it falls within the covered period or the alternative payroll covered period? The forgiveness application specifies that prepayment of business mortgage interest payments may be included in the forgivable expenses. Otherwise, the only guidance on timing for what counts as forgivable expenses is costs paid or incurred. Borrowers should be cautious about accelerating payments or including payments outside the normal course of business in any forgiveness calculations. However, we expect that the SBA will, at some point in time, release additional guidance that should hopefully clarify questions like this. I also would like to emphasize what Bill talked about earlier on. It would appear that there are going to be some legislative changes to this act. There was one article in particular that Bill and I read last night that is going to be sponsored by a Democrat and a Republican, and Pelosi has at least initially indicated that she's going to support it. Trump has indicated that there are aspects that he will support, and it's not as broad-based and as expensive as the HEROES Act. So if these folks all stick to their word, we could be seeing some significant changes to this program in the next 7 to 10 days. That would probably be favorable to most people that received a PPP loan. So we will probably be back on a webinar very shortly after the passing of such a law. What is the process to obtain forgiveness? You know, you really probably need to wait until June 30th just because of all of this alphabet soup of dates that you need to work through in the application process. You will submit an application to your lender. You may be able to do that electronically, and the lender, these poor lenders, will have 60 days to make a decision on what amount of forgiveness you are eligible for. So that's kind of the next fun of this process. And it's 10:06. I think I'm going to stop there.
Great, Rick. Thank you. And thanks for everyone for attending today. You will be emailed out a copy of this of the slide deck from today's presentation, along with a recording of the webinar in the next few hours here as it's all processed. So be on the lookout for that. And again, feel free to visit our coronavirus page at bloomsbury.com/coronavirus for the toolkit and all of our other resources related to this. So thank you for joining us today.